All right, so Bitcoin market updates, crypto market updates. So jumped the gun a little bit too early for the bounce play. I was waiting for blood, and we had a bounce, and I stayed away, and then we had a bounce on the double bottom, and I should have stayed away predominantly because the 1D candle didn't have a wick, and I had a feeling, right? You see here, there's no wick on that. You need to see some wicks here for it to be a true bottom, either like a pincer, tweezer bottom type of thing, or like a nice long juicy wick. But it's like what I said, right? Count the amount of bloody days. You want high probability bounce plays. It's so simple, and people just don't figure it out. They think, oh, it's going to bleed for 5 days in a row. Well, go back and back test the markets. Show me one area on the Bitcoin charts that had like even 4 days of bleeding was an anomaly, right? Even 4 days of bleeding was an anomaly. Usually we get like 3. So we had 4 solid days of bleeding, right? So I felt, I was definitely watching closely yesterday. Because predominantly if we got a drop down lower, I wanted to add some margin. I wanted to add a little firepower since I jumped the gun a little too soon on that bounce play, right? Partially due to impatience and this big red candle. So I bought the bottom of this one, and then we rolled over, and then I added as we started to break out of an immediate bear channel. But you'll see here, there's a couple of reasons for me taking this bounce play trade. We've got the double bottom, right? We've got prior resistance here, turn support. We've got the possibility of a fractal, right? Possibility. And everybody, all I kept on seeing on Twitter, I didn't see panic and fear and horror and all this stuff. All I saw, and I could slap myself in this category because originally I wanted to buy some lower orders. All I saw were people tweeting charts of areas where they want to buy Bitcoin. I was like, geez, for everyone who's so bearish, I'm awfully seeing social sentiments. A lot of people sitting in cash, wanting to buy Bitcoin. Sounds like there's still a lot of buying demand for Bitcoin, isn't there? Well, so, the markets will rarely give you what you want, right? So sometimes you just have to take it when it's there for the taking and not wait around and try to get too cute and too greedy, right? Everyone wants cheap Bitcoin, and my thoughts are what? Oops, sorry. A 38% discount's not good enough for you, right? You want a 60% discount on Bitcoin? You think that Bitcoin's just going to go down in one straight line and give you your 60% discount? Like buyers aren't going to step in anywhere, even if we do. Like, I understand the TA about, I had this as a possible target too. I get it. Prior resistance turn support. I get that, right? It's classic, right? I've traded that multiple times, right? But even if we make it down there, and that's still a possibility, I'm not ruling that out as a possibility. We could just be doing like a dead cat bounce and then roll over and then hit there. And so maybe if people are patient, then they'll be able to get those levels at some point. But that's in the perfect kind of cookie cutter world, right? How sometimes what I kind of lean towards with Bitcoin is that if everybody's just waiting for the cookie cutter trade setup, then chances are Bitcoin's going to give you something a lot more messier and throw a curveball at you, because this is Bitcoin and that's what Bitcoin does. So, perfect world. Bearish example. I'm going to show you the bear example and the bull example, right? The bear example would be like a dead cat bounce to the prior descending trend line for like a 30% gain, which, hey, 30% gain on my cash portfolio, my account, that's a nice chunk of change. I'll take it, right? Maybe it would be lower. Maybe it would grind and hit 20. Actually, would probably, if it were bearish scenario, I'd say it would probably grind and hit prior support, turn resistance. So maybe it would, chop around sideways and, eventually hit that line right there. So, maybe we're looking at like 24 if we continue on this trajectory. I know some people have 22 as a target, but I think that's too, like, they're looking at this immediate descending trend line, and that's a possibility, but I think that's a little too packaged. And I think after such extreme sell-off, we've had a lot of backside of the trend here, right? Like front side for months, from April to mid-June, front side of the trend, right? Backside, fall, lots of red. We've had months of backside here. Check this out. I mean, the backside started right here from mid-June to mid-July. So we've had one entire month of backside of the trend. This is all backside. These are all dead cat bounce plays, lower highs breaking down, right? Finally, we snapped the head and shoulders with the washout type of thing. Established double bottom support right here. I wouldn't be surprised if we hit that NIS double bottom, and at the very least, if it tested up here, bearish scenarios, that would create another type of head and shoulders. Actually, a cleaner, much cleaner type of head and shoulders, in my opinion. So that's definitely an area of interest. And I think a lot of that really depends on the fundamentals in the next couple of weeks with signaling. Now, something interesting started happening today, which is starting to almost make me consider whether or not we're going to have a full reversal and a break to our original target. So I'm entertaining that too. I don't want to just stay in bear mode. I want to be fluid and flexible, right? Notice how no matter what I trade, whether I'm like, oh, this is really bearish, we're breaking down over here, hedging the cash. This is really bearish. I always still entertain both possibilities of bull or bear. I don't want to be married to any outcome. I always just talk in possibilities and probabilities. This may happen. The reason why I do that is so everybody manages risk, and so that I can remain fluid and flexible as a trader. I could have a working hypothesis, but I also have to learn and know how to read the market live to make quick decisions on the fly and adapt if the market doesn't give me my working hypothesis. So for example, I'll give you an example. My initial targets, that I had when I sent out the initial trade alert is I said, listen, I'm with everyone else here. I want some cheap coins. And, perfect world example, I'd get some cheap coins at like this level and that level. Then, being in the market live, observing it live all day and such yesterday, I did jump the gun a little bit too early because I all of a sudden I saw that too many people were getting for those levels. But we hit a perfect double bottom here. I mean, we hit a perfect double bottom, right? And it's still kind of in alignment with the 50% retracement. So I had to adapt, right? And anyone who's too stubborn and who'll just sit there stubbornly, nope, I'm not buying until the market comes to me. Well, you know what? The market doesn't always give you what you want, right? Too many greedy pigs want some cheap Bitcoin down here, right? Well, that just tells me there's too much market demand still, right? Yeah, wouldn't we all love 1,300 Bitcoin again, right? Sure, Wouldn't I just love to double my Bitcoin holdings? You know, sell up here and then double it and buy them all here, and then I'll have double the Bitcoin I have. Wouldn't we all love that, right? But, you know, when there's too many people sitting in cash waiting, this is market psychology I'm playing out here. When there's too many people sitting in cash just waiting for those Bitcoins, stacking those limit orders down low, I'm like, oh, isn't that interesting? So if we do bounce off of this level, all those people sitting in cash are going to have to start chasing higher prices. You know, now they're going to turn into the confirmation traders, and they're going to wait for some breakouts, and now they're going to add to the fuel and the momentum because they're all sitting in cash. What are they going to do? Sit in cash and let the bull market pass them by? Are they really traders? How are their students going to feel just sitting there doing nothing while we get back into bull market? Now I'm still just working at possibilities and probabilities here, right? There's no absolutes. We could still flop and break down tomorrow, right? So I'm not arrogant enough to say that you know, I absolutely know what's going to happen, and so on and so forth. So basically I'm just giving you like a hypothesis, but something else has started to happen very, very interesting on a fundamental level. There is this, you know, because user activated soft fork is a loaded gun, right? It's like an ultimatum, right? And they're basically like, you know, get with the program, or we're forking the chain with or without you, right? We're doing this with or without you, miners. And because everything is stalled for 2 years. So even though putting that loaded gun on the table is a little bit reckless as far as, like, you know, all the disruption and chaos it could cause in Bitcoin, there's a new proposal that came out, and the new proposal is called BIP 91, which is signaling for segregated witness, but instead of a 95% threshold, which is unrealistic, lowered it to 80% threshold. And now all of a sudden, all these mining pools are starting to signal for it, and it's up to like 33%. Even Antpool, which is Jihan controlled, is signaling for BIP 91, and it's just, in my opinion, it's just it's regular segregated witness. It's regular segregated witness, except with vanilla. It's not 2x. This is different than 2x. So anyway, so there's a whole bunch of different models now. There's like Bitcoin ABC, Bitcoin 2x, Bitcoin XYZ. I was thinking of doing like one Bitcoin LMNOP that just keeps the price up high forever. You know, like, you know, we might as well, since we're going to be throwing out letters of the alphabet, we might as well all just create versions of Bitcoin here. You know, I get it. BIP Moon, you know, guaranteed $10,000 prices. Now, we don't know what the game theory is here, right? Because there could be some shenanigans happening. Think about this. You got to think of game theory. There's nobody more invested in the Bitcoin ecosystem than miners. Okay? Nobody's more invested than miners. Traders and investors, we're fluid. We have markets. We can hedge. We can dump. We can buy dips. We can scalp. We're fluid. We're not, we wouldn't be the worst bag holders. You know who'd be the worst bag holders if the value dropped significantly and the network split in two? You know who would lose money hand over fist? The miners. You know why? Because the block rewards are halved, 12.5. They need high prices to pay for all their expenses. You know, if we went into a bad bear trend and Bitcoin went all the way down into $500 or something ridiculous, well, do you know who would lose money mining again? Who would be back into losses in the red? Miners would. Right? You know, in 2015, miners were losing money mining, right? And you know, for the longest time, miners had to based their business off future speculative prices on Bitcoin. And now that the prices are high, if you happen to be like a mining whale, okay, then you're getting good returns, right? So do you really want to see Bitcoin back in the gutter? You want to see sub 100 prices again? You want to see triple digit Bitcoins again? Is that going to keep your business solvent? You want to bleed money out the yin yang, right? Think about that for a second. Who has the power to game this system? Who has the power to cause fear, uncertainty, and doubt, and then possibly use millions of dollars to load up on some cheap coins? I'm not saying that this is the case, but I'm saying you got to think of all the players in this game like a strategist, right? Like this is the jungle, right? And these are the anacondas that we're dealing with. You got to think like an anaconda, right? So now, so think about it this way. What if we establish support, and what if all the miners, now that we're 5 minutes to midnight, 2 weeks out, it's now or never. You either signal for SegWit and we all sing Kumbaya and live happily ever after and get a relief rally, or the whole shipyard's going to get burnt down. The whole thing's going to get torched down. And there's not going to be a bigger bag holder than the miners. Us traders, we're adaptable. We're going to thrive and survive it, right? So we're not the ones that are going to be bag holding mining equipment and warehouses with electricity expenses and all that stuff if the network splits, right? So think about that. All of a sudden now they're all signaling, right? And now the fundamentals could line up beautifully with the technicals if they all start signaling and all of this starts to go tickety-boo and we all start singing Kumbaya around the campfire, then guess what can happen, folks? Our original target could come into play. And all of a sudden, you know, Mr. Crypto Hustle and crew bought the bottom, and we could ride that baby, ride that rocket up to 4,000, right? Ride it up to 4,000. Nice V-bottom. Bam, bounce play, V-bottom. Breakout, right? Fractal. Hey, remember all the FUD down here? Right? We had some FUD over here. Remember that? You know, Vinny Lingham's like, dump your bags, hit the miners where it hurts. And then we went, you know, here's the thing. Here's the thing, folks. Something to really think about here for a second. Bitcoin has not really hit the bubble territory. Altcoins have hit the bubble territory, but like, think about this for a second. Let me just show you something here. Right? Like when Bitcoin broke out of the all-time high on a fib extension, it broke the extensions. It broke the charts. Right? It broke the charts. Right? Now, if we were to apply that same metric to the past wave, we didn't break the charts, folks. We didn't break the charts. You know what breaking the charts is? Up here. That's breaking the charts. Is it possible? And do I dare entertain the possibility that all of a sudden we all start singing Kumbaya, and this was like one big FUD correction before the actual really big move in Bitcoin? I think it's just a little bit too cute and packaged and neat to think that we're going to get all the way back down to prior support. We just got this bull trend started, folks. Right? And altcoins have been flying like, you know, altcoins needed a good shakeout. They were in a bubble. Now, let's see what happens with altcoins. What could happen, and this would actually be poetic beauty. I mean, this would be absolutely amazing if this were to happen. And I don't want to get everybody too excited. I mean, you always got to entertain both possibilities. Hey, if we flip back into bear mode, I'm getting rid of my bags, and I'll let you guys know, and we'll go back into cash. And then if we're gonna buy at 1,300, then let's just buy at 1,300. We'll double our Bitcoin, right? I'm not married to my coins here, right? But what would be absolute poetic beauty is if altcoins all did a dead cat bounce because they bubbled, and then if Bitcoin broke the all-time high, if we got our inverse correlation back, altcoins bleed out the eyeballs, Bitcoin takes back its market dominance after we all if everything goes right with the fundamentals and scaling, and then we boom break up into the high level, and then bam, take Bitcoin takes some market dominance back. King Daddy of crypto is back. Anyways, so that's one possibility and probability. So that's one possibility and probability that I'm playing around with. Now, the other side of the coin, of course, would be to complete this descending trend line and just roll over for a dead cat bounce. And I'm open to that as well, right? I honestly think this oops, wrong, what was I doing? I honestly think that this one is a little bit too soon. Right? I think this is too soon. Anytime I saw a solid bounce play on Bitcoin, right? I've always seen it break the immediate descending trend line. Right? Like, you see it here. Oh, there's an immediate descending trend line, and then it breaks it, and like there was one over here. There's the immediate where is it? There was this one, immediate descending, and it broke it, right? So on and so forth. So anyways, let's see what happens. Let's see if we get the nice V bottom. You see, like, we could possibly get another fractal. We could get, like, correction, and then V bottom, and then boom. Except, in this case, maybe we get the breakout. So it could be like, sell off, bounce, V bottom, and then, come up here, maybe hit a little resistance, or breakout, hit a little resistance. Come up here, have a little correction with the resistance, and then break out, right? Like, there'll be some chop along the way, right? So that's one possibility that I'm looking at. The other one is obviously if it rolls over and we break down. But here's the thing: if I want to just remove all that clutter, how that would look to me would be similar as any other run up, right? We break down, we break down, we break down, we break down, whatever, right? So I'm open to that possibility as well. But if it gets really bullish, instead of a breakdown, it'll change the angle, right? It'll change the angle. It starts off like that, and then the angle gets a little bit more bullish, and then it breaks down but fakes you out, and then it goes up, and then finally it goes up vertical, and boom, right? Just keeps on changing the angle the more bullish it gets. Correction, so on and so forth. So who knows if we have that in us. I think a lot of it still really depends on the fundamentals, right? One black swan event could completely kill that theory. So you have to be open and flexible, right? And in my opinion, if we were to start to break down, then that could be cause to possibly cut out and look for some lower entries, or just, I'll keep my eyes on it as we develop more data, more information, right? But I think that there's a possibility of starting to create like a nice little bull channel here, right? We had a good bear channel, and now we're starting to see some green. So we might be in the front side. We might be in the front side of a new bull trend after all that blood, right? Possibility. So I'll tell you why I added some margin last night. Let's see. I'll go Bitfinex. All right, so we had a solid bear channel. Go in the lower time frame. All right. I was pretty much the first trader on Twitter to catch this and tweet it out last night. I was watching this channel. Sorry, bear channel, right? This is bear channel. Now we have a possible bull channel. So I was waiting for confirmation before adding some margin. I didn't want to get rolled over. Like, I had margin available to protect my position because I bought, obviously I had to have some strong hands, right? I bought a little bit too early. Actually, I didn't buy on that one. I bought on this bounce. I bought a little too early. Woke up. I was in blood. So I kind of bought my own blood type of thing. And so I just had to have strong hands, right? What I wasn't prepared or willing to do was sell my bags. You know, and, you know, why did I buy Bitcoin lower? Well, because I sold it higher. And it just meant I was able to have more Bitcoin, which is good, right? I sold it up here. Just a recap. I sold it up here, cut down. Right? And then we had altcoins bled out the eyeballs. So I was sitting in cash. Scooped up a bunch of cheap alts, increased all my cash reserves by about 20 to 30% across all the exchanges, across the board, right? So this was an awesome play right there, basically just from altcoins alone, right? Oh, sorry, it wasn't that one. My bad. It was this one. That was a little too soon. Sorry. It was this one, and it was right here, right? And I sold into strength, and you can go look at my trade alert, and you could say, well, how did he know to just sell into strength? You know, why did he sell when everything was green and didn't have hopium that, you know, all those bounces would last? Well, you know, very simple line, very simple concept, and dynamic prior support trend line turned resistance, right? It's that simple. I was in the green on everything. I saw everything was in the green. I know the markets are like day and night. Green one day, red the next. Red one day, green the next. So I just play the yin yang, the law of polarity, which is a natural law principle. So I nailed a bunch of bottoms on a bunch of altcoins, sold into strength on a bunch of tops, increased my 30% cash reserves 20 to 30% across the board. So after doing that, being able to buy Bitcoin at $500 cheaper and increasing my cash reserves an extra 20 to 30%, I was a little excited to get some more cheap Bitcoin because that meant I'd have more Bitcoin than I had up here. And you're also talking to somebody who's very eager to replenish my Bitcoin coffers because I've sold 30% of my crypto portfolio into my bank account into cold hard cash all along through this riffraff, right? Every time I would take profit on one of these breakdowns, I pulled hard money out into my bank account as well. Some of it was cash hedge, and some of it, a percentage of it, went into my bank. And the reason for that is risk management, right? If you don't pull any money out at all, then if you hit a real bear trend, who's going to be biting their fingernails the hardest, right? Who's going to get tick lock hoping that everything recovers if all of your money's tied up in the markets, right? So I pulled out 30% so that I can trade with equanimity, so that I can have peace of mind, so that I can have the chutzpah to pull the trigger when I see a buying opportunity or a selling opportunity, and not dally and get paralysis by analysis, hoping that I make the right decision every single time, right? So it's risk management. You know, everything could fall to zero and I'll still come out of this bubble a winner, having made more money than what I started with before the beginning of the year, right? I have more money in my bank than I did when we were here, right? So just in my bank alone. So that's, and I'm only telling you this because I'm telling you my game plan strategy, because I'm not a financial advisor. Therefore, I cannot tell you what to do. I cannot give anybody advice on anything. All I can do is share my own personal trades and strategy and what I do, and hope that people learn from that, right? I actually really don't care if anybody knows what I do as far as money in my bank or any of that stuff. I really don't care about that. I could trade solo and be very, very happy as a kite and not do any of this, right? So that's the reason why I tell you guys my own specific trades and my own personal risk management, and why I do a recap of how I treated this market along the way. It's back testing to learn, right? Also looking at possibilities and probabilities. Now, going down on the smaller time frame, I was watching this bear channel very, very closely, and there was a couple of things that I was looking for. Let me just clean up this clutter, and let me make this nice and big so it's crystal clear what I was looking for. I had margin reserves. This is my strategy. This is my game plan. I had margin reserves available to protect myself in case this market really, really bled, right? So the reason why I had strong hands and I didn't just cut and sell at a loss when I got rolled over is, number one, I only bought on spot, and I had more Bitcoins than, I had more Bitcoin than when we even came up into this region. So, you're talking to someone who's weathered many, many bloody Bitcoin storms holding Bitcoin, right? This is actually the first and only time in my trading career that I've been so aggressive in hedging into USD because of the possibility of hitting a distribution cycle and a bear trend, right? So this is the only time. And another reason why I pulled out 30% into my bank account is I also wanted to free up room on the exchanges, so that, because the majority of my crypto portfolio right now, more so now than ever before, probably 80% of my standing portfolio right now, maybe more like 70%, is actually diversified on several exchanges. So I'm actually trading with 70% of my capital, my crypto capital right now. And usually that balance in the past has been trading with 30% of my capital and keeping 70% of it offline. The reason why I flipped that balance is because I had to personally weigh out the risk to reward of needing to hedge in cash to protect the dollar value of all the gains that I've made in this bubble versus bag holding. So I had to weigh the risk to reward. If I keep it all off on cold storage, well, I'm not hedged in USD. I'm not playing the markets, right? That means that if I bag hold, I run the risk of losing dollar value as a bag holder, right? And like, yeah, you could say, well, why don't you use leverage? Well, to protect that, well, you have to think about the risk to reward with that. If I was using leverage on this bounce play, for example, when I bought here and it rolled over here, maybe I'd get liquidated or have to cut it at a loss. It'd definitely make me a little bit more nervous than just playing the spot markets, right? I can have very strong hands with the spot markets, but I treat margin or leverage with respect. That said, I still had the option, even holding Bitcoins. I knew that with margin as a tool, if we ever got those up prior levels that I was looking at the 17 and even 1300 area, I knew that I still had some firepower to buy some more dips and make some profit. Basically, in my mind, what I was calculating was this. How much dollar loss would I take if we dropped, let's say $500, right? Let's say we dropped $500 more from my entry point. What I would use as a working hypothesis would to be calculate how much dollar value did I lose. So I'd multiply all my coins times $500, and then I'd calculate. Basically, I would have to, on the next dip, I would say I need to, if we get a next bounce play on the next level, I need to recoup that. I need to make $500 per coin and use 1x leverage to double all my Bitcoin holdings, right? So how that plays out, for example, this is a non-linear strategy, okay? This isn't your typical cookie cutter trading strategy out there. This is a very, very different type of trading strategy and a way of thinking about the markets, right? There's a reason why I'm comfortable in buying blood, right? Because I always look for a win-win, right? Trading is not flipping a coin like I'm a winner or I'm a loser. Trading is like, I especially with the bounce plays, okay? Especially with the bounce plays. So let me give you an example here. Let's say you buy a dip right here, right? And the market dumps to this area and you get the mother of all washouts right here. Well, the bigger the dump, the bigger the bounce, right? That is one of my trading maxims, right? Like there's a difference between a nice, sharp, juicy, bloody bounce and the prior resistance turn support versus a slow, grindy, choppy. We weren't getting slow, grindy, choppy. We were getting sharp, right? This is a big candle here, right? If we would have wicked down to here, it would have been even sharper. It would have been even crazier, right? So think of it in this situation. I buy spot here. The market sells off. Instead of, I'm playing on spot, instead of dumping my bags and panicking at a loss, because listen, once you dump your bags, that's called a hard loss. That's not a paper loss. That's a hard loss, right? The markets are non-linear. Now, if you're trading on margin, then you definitely have to be careful. You don't want to cost average down on margin. But for me, if my initial entry is on spot, then that means I have margin as backup reserves, where if we get disgustingly low prices, I can double all my Bitcoin holdings, which is still considered low leverage. That'd be 1x, right, of what I have on my exchange, which is very low risk of liquidation, right? And just playing off the fib levels, you buy here, it dumps here, it bounces, let's say just one fib level up, right? All of a sudden, just based on that, everything that I've lost, dollar-wise value, I've now gained back with more Bitcoin, right? So I cash out the margin long, convert all that cash into Bitcoin. Now I've just recouped any dollar losses by increasing my Bitcoin holdings. If it turned into a real V bottom and goes up even a few fib levels, then I could sell on the descending trend line back into cash, have profit, have even more cash than where I started from when I bought the original dip. Does that make sense? It's a non-linear way of trading the markets. A lot of traders, when presented with one of two choices, treat trading like a coin toss. It's like, make a bet, put your money on the table, heads or tails. I try to say, what about heads and tails? Could I trade both? Could I do heads and tails? So, you know, when I buy dip, if I'm wrong, this is why I'm playing the spot market. For me, the spot market is stress-free trading, right? I don't get terribly stressed over trading spot BTC. As long as I'm buying low and selling high, I don't get too stressed about that. Margin, you have to have a greater degree of respect for. Okay. So that's what I use margin for. As for a long position, that is the only time I will margin long, is to hedge and protect my spot positions. Now, shorting is a different story, right? You can short coins that you don't have if the markets get too exaggerated, right? Okay, so let me break down. I did, knowing that I had some margin long reserves, I did add a little bit more to my position. I did add a little bit more to my position with some of my margin reserves as soon as we broke out of this bear channel. And here's what I was looking at very, very, very closely when this was happening. You have to understand market behavior very intimately to get this, right? And that comes with experience. Okay, it's not something you can rush. Experience gives you confidence and understanding and looking for certain types of market behavior. I didn't just add on the immediate breakout. I was looking at this bear channel, and then I saw it produced a higher low. Look, this is the first higher low we produced on this entire bear channel. We grinded down. Look, low, you know, lower high, lower low, lower high, lower low, right? This isn't a higher low. This is a lower low, lower high, lower low. Green bounce, touch the end of the range, retest the area, higher low. First higher low, step one. Okay. Interesting. Now I'm paying attention. You have my attention. Step two, we break out of the channel. Okay, I'm not just gonna jump on the gun yet because it could be a fake out. And listen, this could still flop, right? I'm still open to that possibility. I'm not married to my technical analysis. I'm not a perma bull. I'm not a perma bear. I'm water, right? I'm a shark swimming in an ocean. I'll eat bears and bulls, all right, if they come swimming. So, comes up, retests prior resistance turn support. That is what I was looking for. I didn't want, because we kind of faked out and then came back down and then we popped up and then we retested prior resistance turn support. And then I pulled the trigger and added a bit to my position with a margin long. Not heavy, not even a full 1x, and not with all my trading accounts. I went 0.5x on one of my trading accounts because I respect and I managed risk. But I wanted an extra little taste for having missed out on the bottom with my spot cash reserves having jumped the gun on this double bottom at 2000 support, right? Like I said, I should have respected this daily candle, and I knew when the daily candle closed, there was no wick on this. Usually, burn this in your brain, folks, usually, so where can you do 0.5x? Any exchange that you can margin trade on. 0.5x, if you have 100 Bitcoin in an account, then you can long 50 Bitcoin. That's 0.5x. You can long less than that. You have 100, you can long like 1 Bitcoin. It doesn't, you don't have to, you get the leverage based on how much order you buy, based on what's in your account size and your deposit account, right? So, realize that if you close out a daily candle and there's no wick, chances are it's going to continue down. You need some wick at the tops and bottoms. It is very, very rare that you will get a washout without a wick. So it's technically not a bottom until you see evidence of buyers stepping in. Now, can you, before the candle closes, can you play it on the edge and help create that wick? Can you be a part of the first line buy support, hold the trend up troops? Sure, get the shields ready. Sure, I've helped create some of these wicks before. I bought at bottoms before, right? But the daily candle closed here, and I should have known. And I went to sleep and I bought a long, and I should have known that if I'd waited, I would have had a better entry on my spot. And now it's just me getting a little bit too eager and hungry to load up and buy some more Bitcoin, because I saw that I was able to buy Bitcoin for $500 cheaper, plus the extra 20% cash bonus that I got off of the altcoin bounce plays. So I was like, man, if I just pull the trigger right now, I've got this much more Bitcoin for the taking right now on the table. Do I want to sleep on that? And I did. And then I had to have strong hands the next day and just have conviction. But again, 4 days of blood, folks. Go do some back testing. Show me anywhere on the charts where you have 4 consecutive days of blood without a bounce. Usually it's 3. And there's a difference between a slow grindy red. Like you had a lot of slow grindy in 2014. So you had consecutive here, like 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. But this is a slow bleed, right? Learn to understand the difference between a slow bleed and a sharp, fast, volatile bleed, right? It's the difference between gently rolling a rubber ball out of your hands versus taking a rubber ball and slamming it into the concrete. Right? That's the difference. Right? If you slam it into the concrete and you've got some big red 1D candles, then you're off your rocker if you think that even if we go down to here that it's not going to bounce. It means that you don't truly understand market dynamics and counterforce. It's the laws of momentum, inertia, momentum, counterforce, inertia, momentum, counterforce. I keep on drilling that. When you got the slow grindy, it's momentum, but there's slight inertia. And this is where you get into those nasty bear channels, and it's very hard to trade these types of bounce plays. You could do them, obviously. This is still good bouncing and stuff like that. But these smaller ones, you got to be so quick on the trigger because this stuff just rolls over. So you got to kind of save your firepower for the juicier areas, right? Like the higher probability areas type of thing. So that's Bitcoin, right? So let's see which one of those scenarios plays out, right? So I just mapped out some back testing, how I dealt with this. I mapped out oh yes, and Kay's actually creating a really good point. saying that AMP dumped really hard, crashed 70% and hardly bounced. And you're absolutely right. And there is one caveat with this strategy. A liquid market, if a market is liquid like Bitcoin, it has a higher probability of bouncing. There are illiquid altcoins that, but now it's bouncing, right? But not as much. But it didn't have like the yet, right? Yet. But if Bitcoin continues and is correlated, then we'll probably still see, I wouldn't be surprised to see maybe a butt into this region right here for an actual bounce. Right, we could get like a dead cat bounce, Poloniex revival on a lot of these coins. Lots of green if volume starts coming back in. You know, if whales start accumulating again, buying cheap, then they'll start pumping the prices again. Right? But this AMP is a good example of why you shouldn't fall asleep on a trade and why you should have pay attention to the market and be able to cut out and have your own plan, right? So like I bought here for the breakout, and I should have sold the day before into strength on the first sign. Shoulda, coulda, woulda. You know, this is where I learn and back test and figure out what went right, what didn't go right. You know, normal instances, it wasn't a very huge position for me. I was only like 0.5% of my portfolio in this market. So I wasn't on it like a hawk. But, you know, it tested prior support here, had a possibility of bounce, but I should have cut it when this immediate line broke, or sold into strength the day before, or on the bounce, right? So let's look at GNT. I bought some of my bags yesterday of GNT back in. I'm not going YOLO heavy on a billion different alts. Like I said, I'm gonna be more selective about my markets, just so I can, in case we go bear, it's much easier for me to manage a couple of markets than, you know, when we're on bull trend, I was scattered, I was diversified in like 20 markets, right? And that was the heaviest I've ever gone into altcoins because they were all so bullish and I was riding so many things. But now, because we're still on the edge, I really want to consolidate and just focus on a couple of markets. And because I was actively trading this market since down here, I figured why not, right? Why not? So, couple recaps. I think I had 3 exits. One was here, or I sold half my bags. Then I sold another half on the dead cat bounce. Then I sold the last of my bags on the breakdown. Those were the exits. Now I bought back in cheaper. And what I see here right now is a possibility, because it bled out so much, is a possibility for some bounce. Wouldn't surprise me because we haven't retested the prior support trend line into resistance yet, right? We did create a higher low. We did test prior resistance here as support. There's a lot of stuff happening, a lot of traffic happening through this area. But if this all depends on Bitcoin. Like, obviously, if this flops, then it flops, right? Obviously, if it breaks down, then I'll probably cut it if it breaks down. I'm not bag holding it. I don't want to bag hold anything if we go full bear. But if it did do that, then we could have like a nice cookie cutter head and shoulders, right? And so if we got a nice little bounce, you know, maybe I make like 80% or something Maybe I make 80% off of a bounce, increase some Bitcoin. Now, I didn't go YOLO on this. I was able to buy back everything I sold up here. What I sold here and what I sold here, I was able to buy it all back for half price, essentially. Around half price, give or take. Maybe a little bit more than half price. So I felt all right with that. I was like, okay, whatever. As long as I'm applying my cardinal rule of, sell high and buy low and sell high, then I'm okay with taking the risk. Because I've already made money and all that stuff. Risk capital's off the table and blah, blah, blah. And I'm just taking like half of the profit and rebuying back low to see if I can like double that again, right? But I'm not going crazy. I'm not going crazy YOLO on a billion markets right now. So that was my pick. Because it had quite a bit of blood. If I were to go on a weekly. Right? 4 weeks of bleeding. In its entire existence. I mean, it's still a fresh market, but its entire existence of price discovery, it has not had 4 weeks of bleeding yet. So I see a possibility of a possible dead cat bounce, head and shoulders at the very least. I'm not gonna bag hold it. I'll probably just sell into strength. I'm not attached to this market whatsoever. That would line up with the 61.8% area ish. Maybe 50, depending on where exactly it hits. So we could, like, if Bitcoin stays bullish and things stay correlated, I think, people are still on the fence a little bit with Bitcoin, obviously. We could just be seeing a dead cat bounce, and I'm entertaining that possibility. I mean, if we roll over, then I'll cut it and look for lower entries, right? So we're not out of the woods yet, but I think that the probability of some up is some more up, I think, is higher. And if we do get some more up, then we'll probably see a relief rally on a lot of altcoins. And I picked GNT because it's on Poloniex, and the Poloniex pumps have had more strength than the Bitrex coins. So I wanted something that could get some firepower, and I made a lot of money off of this market. So I just want to continue trading a market that I've already played really well and made a lot of money on. So that's why I chose that. But you could choose whatever flavor of market you want. All the same principles apply. Everything I say, you should be able to just take on any market and decide for yourself whether or not you want to trade it, right? And everybody should be making an effort to do their own technical analysis so that we're not all chasing and trading the same markets, especially like the more illiquid ones, right? I have to be more mindful that we don't just all move the same markets, right? So anyways, that's it for, actually, let me just look at Litecoin. There's a lot of kerfuffle over Litecoin, so let's just take a peek as a possible breakout. Interesting little story here with Litecoin. Now, what would happen if Bitcoin were to get segregated witness? Would Litecoin stay as bullish, or would Litecoin not have a reason anymore to stay bullish? Maybe it would. You'd have cross-chain transactions. You could have like an exchange between. Possibility we're kind of pushing and creating a however you want to draw your lines. It's the same kind of concept or principle. Doesn't really matter how you want to draw them. There you go. Here's a line for you. 3 points of contact is the rule for a trend line. 1, 2, 3. So it's kind of like an ascending triangle. There's only 2 points of contact, but the principle is the same, right? It's still valid. You know, you don't have to wait for it to make 3 points of contact on a ascending triangle for you to understand the concept, right? Don't be a slave to technical analysis. Just understand the underlying principles behind it. Okay? It's making higher lows. It's banging at the door of resistance. Enough said. That's all you need to know. Right? Call it whatever you want. Call it the flying banana kite for all I care. It's the principle. Right? So, it's consolidating and squeezing. We hit resistance. I know a bunch of people yesterday I saw on Twitter were loading up around here. If I'm going to catch the breakout, I'd like to wait for a clean breakout, some confirmation. Obviously, the more it squeezes in here, the more bullish it gets, building up pressure. And then when you get the breakout play, I would probably long it just for a quick trade. You know, if we were to do the, classic 1.618 or whatever on that, maybe it hits the 0.3 level. So, you could have set risk to reward if it were to break out. You could set it, set your targets. I'd go a little bit under. I don't want to be greedy. If everyone else has the same target, set your targets a little bit lower so that you can sell them to strength. I'd set out like 30%, and then I'd probably, set a stop. I'd be a stickler. I'd maybe risk 6%. I'd do a 5-to-1. I wouldn't risk more than 6% on this if it faked out, right? That's something like that. That's probably what I would do if I were to do a Litecoin. So just keep your eyes on Litecoin. It's obviously creating like some bullish momentum. And, that could be like a first scale out target. Obviously, it could go up higher, but, typically speaking, even if it were to break out, it'd probably hit and then retest prior resistance as support. You could possibly get a bounce play there. Just like you see here, it's retested prior resistance support. Blah, blah, blah. Right? That's the immediate thing. I mean, you could also make a case that there's some movement there as well, but I'm just looking at the immediate move, the immediate waves, right? It could be like the third wave type of thing. Or whatever. It's the general concept. I'll look at ETC and that'll be it. I'd say go do some coin shopping, go hunting. ETC is like meh. I still have some investment wise. We already had the big news. We're making lower highs. So let's see. It could break out. It could, this would be the breakout point. Right here. We scalped a little short here in the room. That's the breakout point. And next target, if we hit that breakout point, I would probably just wait for confirmation. And again, same target as I've mentioned before in the past. 0.01, 0.015. Anyway, so that's it for today's market update.